Well, we got the CPI release coming in just a couple days, but with the banking collapse and everything else that's going on right now, this is absolutely a setup for a giant disaster this week. So let's discuss the banking collapse, the CPI release coming on Tuesday, and exactly how to handle this possible destruction in your stocks, guys, because we got to talk about it. I just ask that you gently hit that like button, and if you aren't subscribed and enjoy this kind of content or my videos in general, make sure you click that subscribe button and turn on the little notifications bell. Even if you're subscribed, turn them on anyways, otherwise YouTube is just kind of dumb and they won't show you my videos, even if you are subscribed. And no guys, I have no idea why they do that. We will get to CPI in just a second, guys, but we have to talk about the banks first. Now, I spent years studying the financial crisis. I prefer studying that over movies, sports, anything else, so I've read every piece of material, testimony, cross-reference it all, and of course, completely ignored the media narrative because I want the actual truth. I want to know what actually happened. And I figure when the book's written by people from both the red side and the blue side, by those who actually lived it all across that entire time frame, and we're making decisions, and their stories all pretty much match up exactly the same in regards to the narrative. Who was at fault? The why behind it all, what actually happened, and then what came out of it all. I feel fairly confident I'm getting an unbiased information as possible. I'm basically getting unbiased information, as much of that as possible, so I have no need for the media nonsense or the movie nonsense or anything else. And I actually put out a video on my group about all this, the differences in the banks, what specifically is happening in this scenario, all the requirements, all that sort of stuff like that, what's changed from 2008 till now, and all that sort of stuff like that. So don't forget to check out the link in the pinned comment if you want access to information like that and all the other stuff that you get. But, back on topic here, to not make this video an hour, let me get to the bottom line right now. And I'll be honest with you guys, I hate to say it, I know some are going to be really mad at me for saying this, but here it goes in regards to the banking and what the heck's going on with the banks right now. This is absolutely, unequivocally not anything like the financial crisis at all, and it's absolutely comical to even say otherwise, guys. Any narrative like that is just honestly laughable. Now, I know I just ruined a ton of fear articles and videos out there where people will draw this parallel and that parallel that proves this is the same, or maybe even worse than the financial crisis. It's going to come, guys, if it hasn't already. Will we have failures? Well, yeah, probably. It's already happening. Will they possibly be the second biggest, bank failure ever in some cases? Well, yeah, if SVB goes under, that's kind of what it is. But remember, that means absolutely nothing without context, guys. And let me give you some context here and a real example so that way you can understand how actually insignificant this actually is, despite the fact that maybe the second biggest ever. Now, SVB has total cash and short-term individual instruments of $6.53 billion. But I can tell you, there are individual clients at JP Morgan with more cash at JP Morgan than that. And for further reference, just so you can kind of draw the two, parallels there, JP Morgan has $1.31 trillion in cash and short-term investments. Literally $6.5 billion, which is the total of SVB, comes right off of JP Morgan's pile if they had all that completely default, and it's less than a 5% decline in their cash and those other investments. That's why context matters, and then obviously that doesn't sound nearly as bad as the second largest bank failure in history may happen. The banks failing in 2008 and 2009 and during the savings and loan crisis, and especially during the bank runs in the 20s and 30s, were far larger compared to their peers than SVB and had a far different story and a far different situation than what's going on with SVB. So I'm watching it for sure, but right now I'm not concerned at all, but it will put pressure on the markets because of the craziness that was the financial crisis, and everybody's kind of, gun shy and scared to death of that regardless. And of course, the media and YouTube and everybody else is going to pick up on it because, we just need more fear and more, all that craziness in our lives. So over to the CPI release and what I see happening there. And there are basically three scenarios that will play out, and I will discuss what I'm doing specifically in each one of those scenarios so that way you have that information. So let's start with the positive one first, and that is we see it inflect down into the low sixes. And if we get this, the table will be set for a nice rally as inflation will clearly be trending down at a nice steady pace, and the reading in February was just a small bump in the road, guys. It was the anomaly. We're right back to that great pace, going down and seeing inflation go down. Now, the reason for the rally is because Wall Street will think the Fed will acknowledge the plan is working if the readings come in this range, and they may have done enough, and the talk about raising the terminal rate higher may actually stop or, at least lessen to a point. And basically, Wall Street will start to trade, assuming that the Fed just won't hike us into oblivion and their worst case scenario probably isn't happening. In this scenario, I will continue to buy stocks as they hit my price targets and continue my modified DCA like I always do. It seems to kind of be a different stock that I'm buying every week, but I will continue to be a buyer when they hit those price targets. Heck, the end of December and the beginning of January, it was all about buying Tesla all day long, it felt like. And before that, it was Meta, which has been on a crazy run and the deals are still great on many stocks. So I'm going to continue to be a buyer even if prices stay this low, because there's no reason not to be a buyer when we really have great prices in a lot of stocks. Now, it's not every stock, but there's still a lot of stocks that are great prices, and I'm going to continue to buy those. But the second scenario is that we see it really inflect down, guys. I mean, like down into the fives. I mean, if we see a 5 at the front of that number, that's basically Wall Street will just accelerate and really push stocks up as they start to speculate on the Fed actually stopping altogether now and everything working fine and all the other, ridiculous things that I'm sure they're going to come up with. Which means, of course, the market will absolutely overreact based on their opinion that the Fed's current plan is being completed, with a chance that they will get even more dovish in the commentary at the meeting coming up, and the market's going to rally big on that. And in this case right here, my strategy is honestly the same as the first scenario. I will just continue executing buys at my price targets, but a little bit different, I guess. I try to never do this, but I don't want to get caught up in any FOMO like many did in August and September on that rally, or even this latest rally at the beginning of this year. I'm not going to get caught up in any of that sort of stuff. I actually think the Fed will stay more aggressive than Wall Street thinks in this scenario, because of course they're going to go immediately to it's done, it's over with, blah, 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 whatever. So if the rally is big, it will correct after the Fed meeting, when the Fed basically, kind of crushes the stock market again, with sticking to their plan in the first place and not going with Wall Street's plan, which of course is probably what they're going to do anyways. Now, I don't think the market will make new lows after that, but the rally will pull back big as it will be overly aggressive. And, basically, the more over aggressive, the bigger the pullback will be. And lastly, we have inflation coming in hot. I mean, like not moving at all or going up. Then I don't think the market will do anything other than just accelerate the sell-off that we've been seeing the past few weeks. They will absolutely immediately start to sell stocks, because we all know not only will the Fed continue to be more aggressive, they will obviously raise the target rate significantly higher too. At least half a point or so is probably what's going to happen. And that is going to induce strong selling pressure into the markets. Now, probably not as bad as the media or YouTube or the freakout or anybody else is going to make it out to be, but it will create big selling pressure in the markets once again. In this case, I will do two things. The first is I will still be buying, but I will be selective, as when you have a big fear event like that happen, the VIX will spike and the sell-off will last a lot longer than a day, guys. It's not going to be just a one-day thing and then back up to running again. It's going to last over the course of several days, maybe even several weeks. So being patient during that time will bring even more stocks not only into my target ranges, but into the lower parts of those ranges, and some may even hit that stupid low territory. So in that particular scenario, I will buy as much of the fear as I can during that time. That's the best time to buy, in my opinion. And this is also where planning is so critical to investing. And this is exactly what we preach in our group, guys. Doing evaluations, setting price targets, buying the fear, and being patient and saving and working to put away cash for the next opportunity when the market rallies a bit like it did at the beginning of this year. And that is one of the biggest benefits of being in the group, is having that support system to be there to kind of help you through this. But let me be very clear. If Wall Street wants to get stupid again, please let them. You want the media to get stupid and YouTube and everybody else, please let all of them get stupid once again. And this is why. The average bear market lasts 289 days, and we are going well past that now, depending upon when you want to put the start of the bear market at. And by the time it honestly flips, and the numbers look good, and you have confirmation that the bear market is over, you are actually in the middle of the next bull run. So by the time you wait for that, you're already in the middle of the next run. So I'm not going to let opportunities pass me by waiting for this indicator, that indicator, or any of the other, this chart say this, that chart, whatever. I'm not waiting for any of that sort of stuff. Just like the financial crisis, I will be buying these arrows because nobody can time the bottom perfectly, and I don't have any interest in timing the bottom perfectly. And oh, by the way, the bottom for this stock is going to be, 3 months before the actual bottom of the market, and then the bottom of another stock could be 6 months after that, and some of the bottoms could have been last June, because that's honestly the truth that we're seeing right now, kind of across my portfolio. That's exactly what I'm seeing. So there's no point even trying to guess the bottom, because the bottom's going to be different for every single stock you own. Hate to bust a bubble here on YouTube and the media of smart folks, but there is no indicator or formula that tells you when that is, so it's absolutely useless to try and time that event like we just talked about. Just put yourself in a spot where no matter what happens, up, down, whatever, you are in a win-win position as a long-term investor. And if you want to see my buy and sell alerts in real time, see my watch list complete with price targets, take 5 courses for free, have direct access to me, be on all our Q&As, jump into our Discord with tons of awesome members, and we got a lot of other secret stuff coming, guys, here in the coming months. make sure you check out the pinned comment down there and see if a membership for my group is right for you. And click this video here to see the 3 stocks that I'm buying now, and click here to see exactly my plan for this market now. So thanks for watching, and we'll see you in the next one.